Hey, what's up guys, welcome back to another video on tradeiq, and for this video I'll be showing you guys a very easy day trading strategy that can be used to make at least $100 a day. So anyways, before we start this video, make sure to hit the like and subscribe button, and also make sure to check the link below. If you sign up with the link below for a FedEx account, you can earn up to $600. So anyways, I'm going to show you guys the indicators that you'll be needing. First up will be your 200 EMA. So for this, click on the EMA, change the length to 200. Style wise, you can change it to anything you like. I'm going to make it white in color. Next up will be your all-in-one CPR. So just search all in and you click on the first one, all-in-one CPR indicator. And as you can see, there's a lot of signals here, and let me tell you guys how you're going to enter on this position. So basically, you want to wait for price to either break out above or below the 200 EMA. So when price is below the 200 EMA, you'll take a short position, and when price is above the 200 EMA, you'll only take long positions. So for each signal that gives here, let's say if the price is below right here, each signal you get for a sell position, you'll take that signal. So let me give you an example right here. We have the crossover where the price breaks below the 200 EMA, which means that we only want to look for sell positions. So we're going to do this right here. You see that there's a sell signal right here. You put your entry right there, and then your stop loss will be right above the cloud. You're going to put it at this blue line right here. You can see this blue cloud here. You're going to place your stop loss there, and you have a 2:1. So unfortunately there will be a loss. But here we have another signal, we'll sell that, and unfortunately it will be a loss as well. But as you can see, the losses are pretty small, and since we have a 2:1, it's not too bad as long as you can have winning positions. As long as you have a win rate of at least like 40%, you can still be profitable. So here we have a position right there, and we'll take a 2:1. So sell signal, and we have a win right there. So we're gonna wait for another position. We ignore this sell signal because we are still in the trade. We have a sell signal right here. Stop loss will be there. Unfortunately, we'll be stopped out on this candle, but we'll enter a position right here. So we're gonna put our stop loss there, and we'll take a 2:1. And simple, another win. So basically, whenever you have a sell signal below this line, you'll just enter a position there, and we'll just take the profit. So as you can see, we have taken 5 trades here. We have 2 wins and 3 losses. But since we have a risk to reward of 2:1, just means that let's say we are risking 1% on each trade, we lost 1%, 2%, and 3%. But then we are gaining 2%, 4%. So net gain will still be a 1% on the account. So even you have a 40% win rate, do not worry, because you'll still be profitable, and just follow the strategy. So this strategy is very simple. Just want to look at the signals. So here we have another sell signal right here. Stop loss will be at the blue line there, and we'll take is 2:1, and another win right there. But the important thing is that you follow the strategy and only wait for the candle confirmation before you enter the signal. So what do I mean by that? So you just want to wait for the sell signal and the candle to close before you enter the position. And also, each time you're trading, make sure you are risking the same amount. So let's say you're risking 2%, make sure that every trade is 2%. So although you might have different percentages of stop loss, you can change your position sizing such that it only risks 2% of your account. So let's look for more trades. So right here we have another sell signal on this candle. We enter there, and we take a 2:1, and they'll be right here. Here we'll be stopped out. Let's say we enter here, we'll be stopped out there. So actually we won't be stopped out, but we'll get 2:1 right here. So that will actually be a win. We almost got stopped out at this position right there, but lucky our stop loss was at the blue line, so that is fine. So yeah, basically that's it for your short position side. Let me show you guys when price breaks above. So here we have a strong trend above where price breaks above. So here we have a buy signal on this candle, and this is valid because the price is already above the 200 EMA. So you enter a position there. Stop loss will be right below. You may take a 2:1. But in this case, since the stop loss is very big, you can also place your stop loss at the cloud line, which is this green cloud over here. So we can take a 2:1 based on that, and there will be a win. Wait for another buy signal. You have a buy signal right here on this candle here. Stop loss can also be placed at the EMA, since if we look right here, if we were to place our stop loss at the blue line, we realize that you're having such a small stop loss and your likelihood of losing is very high. So usually if the stop loss is too small compared to the candle, you can see that the candle is so much bigger compared to your stop loss. I likely will place it at the 200 EMA, and I'll take a 2:1 there, and that will be a win. So let's look for more signals. Here we have a buy signal on this candle. It's very high up, but I'm going to place the stop loss at the cloud because I don't want to risk too much of my account. So we'll place it at the cloud, and we'll take a 2:1. So yeah, basically that's it for this strategy, and you just basically follow the signals, wait for price to be up or down, and main thing is that you want to avoid all these ranging markets. And what do I mean by ranging markets? It means like markets like this where price is above and below, above and below. So you want to avoid this, and basically if you can't tell whether it is a ranging market and you need help, for people who are new to trading, you can add in another EMA. So you can add in, let's say, a 50 EMA. So basically when the 50 EMA is above, you only want to take a long position. Same thing, if the 50 EMA is below, you only want to take a short position. You can see here where the 50 EMA is up and down, you will not take a position, so it helps to filter the bad trades as well. So this trading strategy basically is very good for trading trendy markets, and I would advise people who are new to trading to use this strategy. So yeah, that's it for this video. Hope you guys enjoyed, and hope you guys can watch my other videos as well. Thank you guys, and goodbye.